Hello and welcome to another episode of Frugal Finance. Today we're going to have a quick look at the pie. May my portfolio rest in peace, as we are quite a lot down this week, but that is kind of how the stock market goes sometimes. And it's obviously a super buying opportunity. So when the stock market goes up or down, you can look at it two different ways: in misery, or you can look at it as an opportunity. Depends what kind of person you are: glass half full or glass half empty. With that said, please do not forget to smash the like button. Really helps with the YouTube algorithm. Basically, when you smash that like button, it allows YouTube to see that people are liking the video, and then it will pump it to a new audience, and then people will hopefully watch this, enjoy, get inspired by it, and see what other people are doing, and it will help them out. If you're new to the channel, please do not forget to subscribe. That again will allow you to see any new videos that I post up. So with that said, let's get stuck in. So this is the weekly update on the pie. And as you can see, the pie itself is actually only 0.62% down. Now that is actually pretty good in comparison to the general stock market. Now there are no particular stocks that are overperforming in that sense, but you can see there's an awful lot of red and green mixtures. Some stocks are done particularly well, like Bank of Nova Scotia and I think it was Caterpillar as well, or Caterpillar here, so it's up 11%. Obviously they were counteracted by ones like Lowe's Company, which is down 9.51%, Walmart down 11%, and so on and so on. So the portfolio here, obviously I'll scroll through a bit slower. You can have a look at some of the gains and losses, but the important thing to note is because it is spread over 50 stocks, and obviously the risk factor is quite a lot lower by doing that, it has actually ended up in quite a minimal loss. If you look here, only £4.37, or just over 0.5% loss on the portfolio. So that is pretty good considering what's happened in the market of late. We'll just hop on over to the history here. So we have dividend payments. So you can see I've recently had a little spat of dividends. I know this is supposed to be an almost daily dividend, but I'm assuming that because February's a short month, there was an American holiday and most of the stocks are American, that not all of the dividends are coming through at the moment, but hopefully that will settle down a little bit. And you can see they're only normally around about 2p, 5p, 1p, 18p from Apple. Obviously I hold a slightly more in there than just the pie, and American Express isn't part of the pie, but AGNC £1. So overall the dividends are starting to trickle through. I think there's probably a minimum threshold for some of these dividends, so if it's less than a penny your payout, you probably don't get it. So I'm going to need to put some more money in order to trigger some of the lower ones. I don't know if that is actually the case. That is my assumption. Maybe someone can comment below as to why maybe some of these dividends are not coming through. So that's my kind of pie update, super quick for you. But what I am happy with is the fact that if you look here, obviously my overall portfolio is £56.52 down, or 2.56%, and that is primarily because of some of the stocks where I put larger holdings into have not performed particularly well. So unfortunately for me, it's just timing. I pulled out of Cineworld. It has gone up, and I doubled. I was on about a 50% gain. It's not a company that I believe in overly long term. I do like the cinema, and I probably would have continued to go up, but I decided to pull out of those and go into more sort of currency or payment processing stocks like PayPal and Square, and I bought some shares in them, and they have actually gone down since. So obviously that's quite a big impact. Like Square, you can see, is down actually nearly 14% since I bought it, which obviously is not particularly good. And then I also used the funds from that to buy some CCIV stock whilst it was going cheap. So I know this is the midweek pie review, but I just thought I'd give you a quick overview of the other things that I've been doing and why we see a 2.48% overall negative return as opposed to the pie, which is 0.60. I think that's changed a little bit because the markets are still open. Anyway, if you like the video, please do subscribe, hit the like button, share the video. The more interactive things you do, the wider the channel will get shown by the YouTube algorithm to new audiences, and hopefully I will have some new content and various other things coming shortly. I've been rather busy, not with the stock market. My normal job has kept me quite busy at the end of this month. So the videos have been a bit shorter, but hopefully I'll have a bit more time for some new content shortly. So with that said, please don't forget to subscribe. Don't forget this is financial education or entertainment only advice. It's not for you to copy. I am just a guy on YouTube, so please do bear that in mind and take your own financial advice. And with that said, I'll see you next time.